Hello and good afternoon, everyone, and thank you so much for joining us on this webinar called Business Opportunity Over Chai. Business Opportunity Over Chai is a webinar series presented by the management of Franchise India every day at 12 o'clock in the afternoon with an aim to introduce you to a new business opportunity. Every day, we bring exciting and high potential franchise business opportunities from across the industry. Over the past 27 years, Franchise India has proudly helped thousands of investors finding the right franchise business opportunity and successfully start their entrepreneurial journey. We, as world's largest integrated franchise solution company, our role is to make sure your investment is safe by taking an informed decision and your journey from investor to entrepreneur is smooth and successful. In today's webinar, we will talk about a business opportunity with a jewelry brand from Uttar Pradesh called Aisshpra James and Jewels. Aisshpra James and Jewels is a heritage jewelry brand rooted in trust, craftsmanship, and excellence, with origins dating back to 1940s. Founded by Sri Balakrishnji Saraf and late Sri Gopi Krishnji, the brand has evolved from a modest beginning into a well established name in the Indian jewelry industry. With over 85 years of legacy, Aspira has built a strong reputation for offering high quality gold, diamond, and traditional jewelry, blending timeless craftsmanship with modern retail practices. The brand caters to both bridal and everyday jewelry need, appealing to a wide range of customers in the mass premium segment. Headquartered in North with a strong presence all across Uttar Pradesh, Aspira operates multiple retail outlets and has earned significant customer trust through its focus on quality, transparency, and the customer experience. Overall, built on its strong legacy and the growing market demand, the brand is now expanding through a FOCO model, franchise owned company operated model, offering investors an opportunity to partner with a trusted and a scalable jewelry retail business in the rapidly growing Indian market. Talk more about this. I'm joined with my colleague. We have Tanu. He is the strategic consultant. We have Rahul Vadva. He's our channel partner based out of Lucknow. He's the one. He and his team is going to taking care of this business expansion, particularly in the UP. Uh, and we will soon have also Vishal, who will be representing the brand. He is the franchise business expansion manager. He will be joining in a minute. Um, overall, my request is to all the people who've joined through this webinar. Uh, we'll request you to please share your queries during the presentation. You will also have opportunity to ask your set of questions, which you may have related to brand, the business, the anything. You can put all your queries into the Q&A box, and we will take them up once the presentation is over. Now, before we start, before we invite Vishal, he is joining in a minute, little bit experiencing some technical issue, joining this webinar. Meanwhile, since we already have Tanu, who's seasoned, the strategy consultant, he's the one who made this. I would like to, request him to let's get started with a little bit of introduction, about the brand and how we have taken this up for their expansion.
Yeah, sure. Hi, everyone. Just want to let you know about Aisshpra a bit again. And it's a brand from UP. It's a jewelry brand from UP with a very strong hold on the eastern side. And now they are trying to expand in the western front of UP with technically tier 2 cities, which are very prominent. For example, Meerut, Agra is there, and also parts of Uttarakhand. For example, Dehradun and Haldwani is there, right? But the USP of the brand is that they're targeting the masses, and for that they have come up with a very good strategic move of catering mainly in 18 karat gold. since the gold prices are skyrocketing. So to make it more viable and have a better reach within the masses of the UP population, the brand is trying to cater through 18 karat, and they also have a very strategic plans of moving towards 9 KT as well, right? So yep. So this is the leadership that we have at hand, Mr. Shri Balkrishan ji Sharaf, Shri Atul ji Sharaf, and yes, Mr. Anup Sharaf and Miss Vandana Sharaf, who's actually the VP of Marketing and finding the bright faces for the PR of Ashpura. And then we have the young generation, Shri Soumitra Sharaf and Shri Vaibhav Sharaf, who are the young blood leading the expansion and overall development of the brand with keeping toes with the trends we have at hand. So, yeah, as I said, Ashpura Gems is a huge name in UP, and hence they have left no stone unturned. And they're catering to almost all the segments that they have, and also planning to expand their horizons with the coming trends, for example, lab grown diamonds as well. Yeah, as I told you, कि हाँ उनका presence जो है it's very solid in the eastern front of UP. Like Gorakhpur is there, Lucknow, Azamgarh, Varanasi, Ayodhya. They've you name a city which you think is a potential market for jewelry, and they're already there with huge format stores and a huge crowd every day. Talking about the trends of the Indian jewelry market, yes, it's on a rise, but the thing is that the prices of gold, the precious metals, gold and silver, both are skyrocketing. So the strategic move that the brand has played, as I mentioned, is to make it more affordable, more versatile, and more friendly for the audience throughout UP, without leaving any target audience that might be catered under this. So yes, the growing size of the population, especially the millennials and the Gen Zs, they do seek affordability and some trends that they need to cater, especially for the everyday uses. So for that, the current prices of the jewelry we have at hand becomes a bit out of budget for such a TG. So for that, we are trying to cater everyone without leaving any target audience that could be catered, right? And again, yes, it's a fact that urbanization has led to more disposable income amongst all the three formats, like the baby boomers, millennials, and the Gen Zs. So yes, everybody's trying to shift towards luxury, everyday, and affordability as well. So specifically sticking their roots to UP, because they are very hyper local, very well read. They have very read the market very well in UP, and the designs they have cater specifically to the taste of UP audience. And fortunately for us, UP forms one of the major contributors in the jewelry market of India, and it's got one huge untapped potential under it, especially because of again the price gap and the budget, which is more oriented with the audience nowadays because of multiple macro factors, right? And again, as I mentioned, Ashpira is catering to the huge blend of the designs which are preferred by the UP audience, which is almost like 85%. Now, this is the game changer for us, how we have strategically placed Ashpera to tap into the upper middle class and the mass market, because this forms a very huge chunk of the UP audience we have at hand. And tapping into that market for be it occasional basis, wedding basis, or everyday jewelry basis, this is a game changer for Ashpera, and that is what is driving the revenues. This one move. So for expansion, now trying to capture the West, our cities we have in focus are Agra, Kanpur, Moradabad, Bareilly, Meerut, and also some border cities like Dehradun and Haldwani of Uttarakhand and UP. And yeah, we are going for the FOCO model in this because the brand is very conscious about what they cater to the audience, so that it helps all three formats: investors, customers, and the brand itself. So for the finances, I would request Mr. Prawal to take a bit of charge on this, and then we can move forward. Prawal?
Yeah, thank you, Tanu. So, as Tanu just told that we are expanding in UP, so our main focus is on tier two and tier three cities. So talking about the area required, we are looking around 3,500 square feet in tier 3 city and 6,000 approx in tier 2 city. So initial investment covering the capex and other things will be around 4 crore in tier 3 and around 6.6 crores in tier 2 cities. The franchisee ship fee is flat at 15 lakh rupees, and initial inventory required investment of 51 crores and 25.5 crores from the franchisee side. So we have a minimum guarantee of around 10% and a revenue share based on the metal sales. So gold sales will fetch a revenue share of around 2.82%, diamond jewelry sales around 7%, and silver and others will account for 5%. So whichever higher minimum guarantee or revenue share, that will be paid to the franchisee. So the payback period on capex is very very less, and literally in the second year the capex is recovered by the franchisee. So overall, if you see, the agreement period is for 10 years, and the franchisee makes around more than 4 times of the investment during the agreement period. The IRR of which comes over 18% cumulatively over a period of 10 years. So these are some of the financial numbers, and I think so one of the best financials which a franchisee can have it.
No, I agree on that. And the catch in this is that I believe the brand is requesting for the investors to bear on the rent and the utilities.
Yes, I was coming to that. So the franchisee will be having or will be required to bear the expense on the rental side, and on the rental and electricity cost, along with some of the very few other costs relating to their finance cost, which the franchisee will take. Other than that, all the running expenses, operating expenses, the franchisor will bear.
Hmm. Right.
Sir, can you also, share some insight about your existing stores, uh, and also, maybe a little bit of sales. Not we won't go deep dive into more detail, but any overview picture of the how business are being done by your existing stores. How many of them are franchise stores? How many of them are the Coco stores? You can
Yeah,
brief us about
so
that.
total as of now, we are operating 13 stores, which is a mix of Coco. Around we have 4 Coco stores and 3 stores under partnership. Rest of the stores are on FOFO and FOCO model. So lately, the brand is expanding only on the FOCO model, so that the eventuality and appearances of all the stores and SOPs that remains the same, uniform across all the stores. So in terms of sale, you will say that gold naturally accounts for around 80 plus percent of the total sales, and followed by silver and diamond. So 10 to 12% is silver, and rest is stud sale. So the brand also has a very large range of products in the three metal segment in which we are operating, right from 22 carat, 18 carat, 14 carat, and now largely as the prices are going up. So the preference is also coming on, or the demand is also coming on 9 carat gold jewelry. So the brand will soon have 9 carat gold jewelry also to cater to the masses and all age brackets, which normally is required by any of the families.
Right. We also talked about the minimum area required. Will you consider any like plus minus, or like you're stick with
Yes,
what
yes.
we actually require?
These are the ballpark figures which ideally
Mhm.
should be there, but 5-10% here and there that will make.
Okay. Can you also talk about your existing stores, like how big they are, and what is the major, the jewelry sellout from those stores, like the daily wearing or majorly like the wedding collections and everything?
So currently we have area ranging from 3,500 to 15,000 square feet. So Gorakhpur, our COCO stores are much bigger in size. They
Mm-hmm.
are around 8,000 to 15,000. And franchisee owned stores, they are typically 3,000 to 5,000 in range. So as far as the sales trend is concerned, so that is pretty a mix. So lately, as the price has gone up, so Gen Z being more involved in the purchases, so lightweight jewelry is the preference as of now. But surely the wedding collection is also a very heavy in our sales, as during the wedding season the demand for wedding jewelry that goes up like anything. But if you will see the trend, the lightweight jewelry is on the rise.
Okay, and also how you position yourself as a brand as compared to the other existing brands. For example, in case if I look into the initial inventory, it is almost like 51 CR, which is more or less or equal to the existing some of the big brands in India. How you position? What is your positioning, and who you want to cater? Who's your
So
customers primarily?
So we as a brand cater to every facet of our customers, whether they are ultra rich, they are rich, or they are middle class or lower class. So keeping in that in mind, we have a range of jewelry available with us to cater to each of these masses. That's why you will see that a little bit our inventory is on the higher side, as we cater to every age group and every income segment of the population. And adding to this, as the prices has gone up, so the inventory, if you will see in volume, that is static, but in rupees terms, so it will see that the value has gone up. And all the inventory upside, that is for the franchisee to have it. So upside of the inventory that is enjoyed by the franchise.
Okay, just to get more clarity about the business model which you are offering is, the four co. In overall, the business model, what level of control does the investor have? What would be my contribution? What will be my role in overall business?
So the franchisee is typically have role in marketing the brand in the area in which, or the geography in which the franchisee is taken, because all the operations and marketing activity that is taken by the brand itself. So whatever word of mouth or other means which the franchisee can help, that is required to be done. Otherwise, all activities that the brand is taking care of.
Yes, and I think guys that is very important
Yeah,
because ultimately it's going to contribute to the revenue. And since it's a FOCO model, the franchisor is going to get the share of the revenue itself. So yes,
correct.
it's just utilizing something very intangible that they have at hand already, and then turning that into their pocket.
So, I mean, and also if you could highlight some of the important factors of like day-to-day operations, who's going to take care of the staff, and of course the sales performance as well. Um, and what your process of how would you maintain the transparency of sales reporting in the revenue sharing system?
So we have a centralized ERP, the rights of which are given to everyone, at least the read write, not the write, the read write. So whatever the sales is happening, that all happens through the ERP. We don't go outside ERP for anything. So complete transparency is there, the levels of stock or the level of sales, daily sales, that can be had by the franchisee online. We also share periodic reports and reconciliations with the franchisees so that complete transparency is maintained. So as a brand also, we believe in complete transparency and long-term, we seek long-term partnerships only.
And sir, who will take care of the operational cost? Like, will you also be taking care of the rent and the utilities, or you will just be taking care of the staff, the sales staff, and the sales?
So rent and electricity, along with some expense on security or something, that will be taken care of by the franchisee, along with any borrowings which they have taken. Otherwise, all the expense on manpower, branding, IT, that will be taken by the brand only.
And what about the discount or the local promotions, then the marketing?
So local promotions and marketing, that will be taken by the brand. Discounts, we agree whatever the discounts are given, a bracket is given to the, because since the operations are done by the brand only, so a range of discount is given. Beyond that, if any franchisee gives additional discounts, then that is taken care of in the revenue share.
Okay, and a few questions on, like, particularly specifically, related to the risk that we may have. What happens if the store does not perform as expected? What would be your role? I mean, since it is focus, obviously it is your role. So, I
Correct.
mean, is there any exit policy or something?
So as far as keeping myself in the shoes of franchisee, so franchisee, I am making money because I am guaranteed a minimum guarantee.
Got it.
So my risk is very minimal.
Mhm.
So I am making money if even the store is not doing good. So that risk is being taken by the brand itself. So that's why the minimum guarantee clause is there.
Agree. Um, So I think, I mean, these are some of the questions we usually get from the investor side when they choose, looking into any brand. Uh, on the screen, everyone can see the investment which we required, the kind of space we required. So the overall the snapshot of your overall franchise proposal is visible on the screen. However, we haven't gone, more deep dive into the Excel sheet. We can do that separately when you show your interest. I think I already have shared the number in the chat box. Rahul Vadva is the one who's taking care of this business expansion all across the UP. He and his team is going to taking care of that. So you can get in touch with Mr. Rahul. He's a local guy in Lucknow, so he's more aware about all this. So you can get in touch with Rahul, and he can help you further, aligning your call with the brand stakeholders to discuss more about the more deep dive financials and rest of everything you would like to know about. Also, sir, any idea like what kind of space, what kind of location you is your preferences? What kind of
So
location we are looking for?
So we are strong in eastern side of the UP,
Mhm.
and most of the tier two, tier three cities are covered. So we are now looking to expand towards the central and the western UP,
Mhm.
along with some of the cities in Bihar, which are closer to eastern UP, along
Mhm.
with border towns of Uttarakhand. So these are our priorities for the coming year.
Mhm.
So next year we will open new geographies but for the financial year, next financial year, these are the locations we are looking to expand.
And to be precise,
Voice is
so
breaking. I know your voice is breaking.
I
But
think we
anyways,
are
I
trying to
think
find a high shopping, or I'm sorry, or even the bridal compounds that we have at hand.
right. Um, so, I mean, in case if you overall, if you look into this opportunity, I think we already know that India is one of the largest jewelry market in the world. And the jewelry here is not just a product, it is an emotion. Whether it is a wedding, the festival, the investment, the jewelry demand in India is always strong and consistent, even if there is a high price is of gold. Now, what is interesting is that the market is going through a big shift. Earlier, most jewelry sales used to happen through a local unorganized player. But today, the customers are moving towards the trusted and the branded jewelry retailers. And this particular shift creates a huge opportunity for organized brand like Ashpira. If we talk numbers, the Indian jewelry market is already, more than 100 billion industry and continuous to grow steadily, every year. And with the rising income, disposable income, especially in tier two and three cities, the people are spending more on quality and the branded jewelries. The states like Uttar Pradesh, particularly where we are trying to expand our business, the opportunity is even bigger. The large part of the market is still unorganized, which makes there is a massive room for organized player to grow and capture the market share. So overall, I think this is a great opportunity. This is a category where demand is already proven, margins are strong, and the shift towards the branded retail is accelerated. So that's exactly where the legacy brand like Ashpira fits in perfectly. And in case if you would like to go with the brand, with their success journey, trust me, I saw some of their stores are huge. They compete with some of the big brands, you can name it. And the business is also doing pretty good. I mean, this is indeed. I mean, I really found this astonishing kind of experience when I saw those stores. So my request is to please get in touch with us. You can call Rahulji and you can have further discussion about brand. You have a lot of reason to join this. Strong legacy and the trust. More than 85 years of legacy, which means the customer is already building trust. And in jewelry business, particularly, trust is everything, right? So that is the advantage you will have as a partner of this brand. There is a high demand category. Jewelry is just is always in demand, evergreen category in India. Whether it is wedding, festival, or investment, demand of jewelry will always be there, has been there, and will always be there. So you are entering into a stable and the proven market. It is a FOCO model, so you don't have to take care of the operational hassle, right? In the FOCO model, you just have to invest into the store and uh, invent. Rest of all work, operational, and rest of all things will be taken care by the brand. So they have idea, they know how professionally managing the business. They have been doing this with multiple stores already. I think that is the best part. Uh, Also, in case if you look into this, you know, unit economics, that is also best. The numbers are quite attractive. 18% plus IRR, minimum guarantee, and strong long-term returns. Plus jewelry as a high ticket size. You also have a great potential and strong potential. Uh, Expansion, if you talk about expansion, I think we already have discussed. I think Tanu has already talked about the cities where we want to spend. Particularly, we are focusing in UP, particularly in Agra, Kanpur, Muradabad, Bareilly, Meerut, Dehradun, Haldwani. These are some of the places where we are looking for. Even we can go to Bihar also, right, sir?
Correct. Nearby towns which are nearer to UP East, we can look for that.
Right. So,
Already we have 2 3 franchises tied up in the nearby towns, but still we are open to have more franchises there in UP, in Bihar. So that is also our coverage area for this year.
right. So we have good opportunity in untapped markets like you can see on the screen where we have where we have less organized jewelry retail and those areas where we can take care of those customers. So that overall means that you are entering into a high growth market with less competition. So overall, you're investing in a trusted brand in a high demand category with a professionally managed model and a strong growth potential. That's what you're gonna get. That is what it's all about, Aisshpra James. Um, Anything, Tanu, you would like to add anything apart from that? If we have any few slides left.
Yeah, no, not on the slides, but I would like to point out on one thing that since the brand is already operating on 13, 14 stores under different formats, be it Coco, be it Foco and Fofo. So the brand is very confident about this particular model, so that they have, because they have addressed all the gaps in how they want to expand and hence chosen this very carefully, keeping the brand image, the returns on the investment, and the customers in mind.
Correct. So hope this has given you a lot of information about the brand, the business opportunity which we have. If anyone is from UP would like to go for this brand, my request is to please get in touch with Rahul Wadhwa, who's our channel partner based out of Lucknow. He can help you further to get in touch with the brand. I think that's it for the day, everyone. Thank you so much, everyone, for joining this. Thank you so much, Tanu, for helping me drive this webinar. I really appreciate you for helping driving this presentation. Thank you so much, Prabal Jainji, for coming here, talk, on the show and talking about the financials, a little bit of numbers. And Rahul Wadhwa, thank you so much for joining us. So that's it for the day, everyone. See you tomorrow once again with a new brand, and we'll explore